Eric, thanks very much for joining us here at MIPIM. You're Head of Investment Management for Asia Pac for Union Investment. So just give me an update on I suppose, how you're seeing the markets there.
Very similar themes to what's happening around the world, particularly for that core investment space. Late cycle kind of behaviour is very also common in these markets as well. So it's one where we're still very aggressive to actively invest into the markets, but also one where there's a level of caution and selectivity and prudence in terms of the approach that we're taking.
And in terms of the market, do you see a big difference between Asia Pac and Europe?
It's an interesting question because when you talk about comparing Europe to Asia Pacific, I suppose where the two things that are common is, I suppose, one is that late cycle piece that we just mentioned, but the other one is that as a region you're actually a composition of multiple countries. So and each country is very different, both in its structural elements, lease length, termination rights, those things that are more structural around real estate. And then you also have that regulatory piece, whether in the form of taxation or in the form of rules around how buildings are owned, maintained, those sorts of elements. And that last piece, which is also one that makes our jobs very interesting, is actually the cultural piece. So, the culture of an Australian and how you speak versus someone in Japan, you also have to kind of have a hybrid personality to also engage and be respectful or get the attention of people. And those sorts of things provide a different nuance in addition to language as well. But otherwise, very diverse markets. It's not homogenous at all, the Asia Pacific market. And the relationships that you have will be where the focus is to get access to pipeline.
And how active is international capital in the region? Have Union Investment had to create a different strategy for Asia Pac?
Yeah. So I suppose for that international capital piece, increasingly every year there is more and more attention from international capital. One of the more recent pushes in the last 6 months is the hedging costs between euro and US dollar. That has gone up basically. So the feasibility it makes Asia Pacific look more attractive on a relative basis. So the attention is there, but if in terms of activity, in terms of transaction, the local market is also, or the domestic market is also very strong as well. So in terms of, if you look at the pie of who acquired things, there will be a bit of a mix in terms of the outcome. But in terms of attention, there are high levels of attention from international capital every year.
And in the US, Union Investment started out in office and then diversified into other sectors. Is that also the strategy for the Asia Pacific region?
Yeah. Well, historically it's always been an office-led strategy. It's probably the one where CBD-centric, good credit quality tenants. It's an easy to understand and easy to talk about from when you go through that investment process. But what we've done principally in the last sort of 12 months or more has really been to spend more time and more energy to spend diversification by sector. The step before that, we diversified by geography, going to secondary markets, but the step that we're focused on now is really into that sectorial diversification. So the key ones that have come up are hotels, but with master leases. Industrial has also been a very good thematic as well. And retail has been on the agenda, but it's not a popular topic as a general investment thing. But I think it's one where it's worthwhile investing into that market to keep on understanding and be sort of ready in case there is potential for better returns in the future.
And at the moment, obviously, Union Investment is active in office, just in Australia and Japan. I suppose, why that sector?
Yeah, so that really comes back to office being typically CBD-centric. It's got a great liquidity story. Simpler from an asset management perspective. It's kind of the easier asset class for a broader audience to appreciate. When it comes to the ones that we've been talking about more recently, which is the hotels and logistics, there's a bit more specialisation that's required with those kind of like sectors.
Finally, what do you see as the outlook for the region and some of the key trends when you're looking at Asia Pacific?
I think one is you'll continue to see more of that international capital that we spoke of coming into the region or looking to invest into the region. So that weight of capital will keep, I think cap rates will remain compressed. I don't think we'll see major sort of like blowouts or further compression going too much, but we'll still see that there. I think what we need to keep an eye on is really going back to the old school, like real estate, where we are in the rental cycle. Just be prudent about the investments that we make. So I think it's because I think ahead of us, devaluation risk could be one of the things that we should be mindful of. Yeah.
Great. Thanks very much for joining us, Eric. Pleasure to talk to you.
Yeah.
Thank you.
Thank you.